What's going on, guys? It's Nick back at you with another video. We have a new microphone. We're going to be using this to record a bunch of old data, update it, bring it to 2019, almost 2020. Today, we're talking about how to use the algorithm software. Now, when I say algorithm, what do I mean? What does that even mean? Nobody has algorithm software. They have your average trading, this line crosses that line, repaints, indicator, BS, nonsense, blow your account system is what they have. I have spent just about 5 years developing and testing and optimizing this software. So what do we say? What do we mean by algorithm? Algorithm means you're using artificial intelligence. You're telling a computer, you're giving it data, you're saying, take this data, analyze it, and come up with a solution. Now, this algorithm software takes the past 10 years of your broker's data. Typically, a trader only looks at the past couple months, if that. Some people just look at a week. If you're on the hourly chart, you're looking at even less. Now, this data is repetitive. The markets repeat over and over and over again. So what my algorithm will do is it will take the highs from the daily, the weekly, the monthly, the yearly, and it'll look at the lows from the daily, weekly, monthly, yearly, and it will find occurrences where those highs and those lows match up from months ago, from years ago, from weeks ago, places you'll never look, never to think of. And when that happens, it plots two lines. It's either going to be two red lines for lows or two green lines for buys or highs. Now, what does that mean to you as a trader? All that means is that this is a point in the market where price is weak or price is strong. Price is going to hit a wall. Price is going to hit, a top, a peak. There's this idea that in the markets, there are hidden liquidity pools. In those liquidity pools is where price moves. Price moves sideways until it hits a liquidity pool and makes a decision. What my algorithm is going to do is show you where those peaks and those valleys are. And what you're going to be able to do is always have the best entry with the lowest drawdown and the highest chance of success, 80% plus success rates. All my students, 100% success rates as far as their journeys go. So moving forwards, let's take a look at an example. I'm on AuDCAD. I'm on the hourly chart. We're looking at two different lines. Above, you see a green line. If you hover your mouse over it, you'll see that it says a high. It's a support resistance from a month and a week ago. Okay? So that's an important level. Go down a little bit, you have a red line. It's a low from a week and a month ago. Plotted the exact price, the exact line where price was the weakest. Price came up below it, tested it, failed, and then dropped. If you check how far it dropped, it was an easy, clean, 25, 30 pips, depending on your entry, spread, all that fun stuff. How to use that to trade, Nick? What the heck am I going to do with that? Real simple. You're going to wait till you get an alert. And what happens with alerts is this algorithm software also has, if I can click it, also has a alert system. So you don't have to scan your charts. You can just open up all your charts, put the algorithm on them all, and then just wait, kick back, relax. There's no technical analysis. There's no, waiting for this to cross that and, this to oscillate that way. And the RSI is at a 70 and, divergent. That's all nonsense. That's trash. That's out of date indicators that are designed to make you fail. This is why 95% of traders fail. It's because they're using stuff from the 40s, the 60s, the 80s, the 70s, the 90s. No, bring it to 2020. Come on. Act like you are smarter than following a little line that crosses this way and that way that thousands of traders use to lose all their money every day. Anyway, you're going to see an alert. It'll give you a timestamp. It'll give you the pair. It'll tell you the price. And it will alert you when it comes into range. So when this was coming into range, I like to operate on the 15-minute chart. That gives me the best view. And then when I'm making my entries, I'm in the 5-minute chart. So my plan of attack here would have been seeing price. You know what? Let me draw it out for you. Annotation. Draw. I want to draw with some red. Okay. maybe that's too thick. So we'll use a little something lower. My plan of attack would have been prices coming up here, right? It alerts. It's going to alert because it's within the range. I get a little pop-up. Bloop. Take a look at my charts. And here's how the algorithm works. It's real simple. The rules are so simple. I'm going to read you out the rules right now. You can write them down. You can memorize them. You can completely ignore them and probably still be successful. Whatever you really want to do will be fine. The rules are as follows. Number one, price has to be below the red line or above the green line. You want to buy a green at a bottom and you want to sell a red at a top. So if price is at the very bottom of something below a red line and showing a sell because it's below, you wouldn't want to sell it because you're betting on the price breaking lower. You would just wait. What you want to see is price above a green at a low, and you're betting that it doesn't break and it's a buy, right? In this instance, we have price at a high. It's a perfect setup. Price is at a high. It's below the algorithm. It's testing the algorithm. We're looking to take a sell. Next, price tests the line at least twice. Price testing can happen on the 15-minute chart. As you can see here, price comes up, tests, fail, test, fail, test, fail, test, fail, test, fail, and then finally drops. You can go to the 5-minute chart and find that. Price comes up, test, fail, test, fail, test, fail, test, fail, and then drops. It's up to you. I like the 5-minute. I think I see more, but you can see just as much in the 15. I like really accurate entries. If you want a super accurate entry, that's the way to go. And then here's the thing. Price is going to go in your favor more than likely. Your stop loss is this. Price is going to say not test the line. Say it doesn't test the line. It goes like this. It comes up and then it lands on top of the line and it starts testing the top of the line and starts moving up. That's where you're out. You're gone. Right here, X out of the trade. Done. And you're only going to risk somewhere in the vicinity of 5 to 15 to 20 pips typically. It's not, none of this swing trade, 50 pip, 30 pip stop loss, 80 pip stop loss nonsense that most traders use because they can't accept a losing trade. Most people lose because they start losing in a trade and they have this philosophy. Oh, it's going to turn around. I'm going to be fine. I'm a swing trader now. It's negative 180 pips. No. We're in, we're out, we're making our money, we're on to the next trade. Easy as that. If it goes, once again, if it goes above your line, or say it's a buy, say price is a buy and it's looking good, but then it breaks below and it starts testing below, it starts moving down, you're out. Just as fast, as you were in a buy, you're out of a buy. So the ideal entries and setups are just two different things. Price, if you're using a green line, you want to have it at a low and you want to make it a buy. So price is above the green line. It's testing it, it's holding. And then you take your buy, your entry is like here, and price moves up, right? And it's up to you. You can put in a 5, 10, 15, 20 pip stop loss, put it down here. Or you can be more aggressive. Once it moves in the profit, drop it at break even. Make it a risk-free trade and then just let it play out. Personally, I don't use stop losses. The reason is this. I'm an active trader. When I trade, I'm sitting at my desk. I'm sitting at my monitors. I'm watching. I'm waiting. I'll use a stop loss if I'm going out, if I'm going to sleep, if I have some running around to do, something like that. For you, you're probably working, you're busy guy, busy girl, whatever. You can use a stop loss. You can make it 20 pips. You can put it at break even. Whatever you need to do. There's a lot of solutions out there. I'm going to be going through a couple of those solutions in further videos for those people who are more on the move and looking to be less active trading and more passive monitoring, which is fine. We can absolutely figure that one out for you. But yeah, that is basically the algorithm trading system. So real simple, you know, price is below a line, a red line, it's at a high, comes up, tests, you make your entry because it's holding, it doesn't break up. Yeah, it doesn't break up, and it drops down. When it drops down, you put your stop loss into profit or at break even or very small. And here's the thing with take profits with the algorithm. I don't use take profits. Reason for that is because the markets are exponential. Take profits are guesses at best. Take profits can be missed. Take profits are, you know, typically limiting. So you could take profit and then the move is another 50 pips in your direction and you miss out on profit. But they also can be said for trader psychology. So that really comes down to where you're at, where your training is. So if your psychology is not good, if the bread is on the table and you're not willing to take the bread, like you've probably experienced this before, where you have a trade that goes deep in the profit real quick, and you're like, oh, if I close this trade right now, I'm up $20. If I'm up $200, I'm up $2,000, I'm up $5,000. I bet it's going to go to more. That's exactly what you say. I bet this trade will go further. And lo and behold, it's back at break even, and then you're in loss. How many times has that happened to you? So learning to conquer that psychological factor about the markets will help you by having a small stop loss to limit your loss potential. Imagine just losing, 5, 10, 15 pips per trade and having an 80% win chance in the other direction. You're going to make so much money. Your odds are going to be so in your favor, it's actually disturbing. Because you're no longer, giving yourself these massive drawdowns. What you would lose in one trade, you could lose in 3 or 4 trades with the algorithm. And you're also opening yourself up to actively managing your trades as far as stop losses go by moving your trade to break even and moving your trade into take profit. You now have made yourself a risk-free trade, which is a great feeling because now you know I'm either going to hit for nothing, hit for a small win, or I'm going to knock it out of the park and close it manually, or maybe I'll be satisfied or I have a number in my head for how many pips, how much money, whatever it might be. It depends on your goal, your trade plan. If you don't have a trade plan, I will be making videos about trade plans, what you should have as a trader, what it takes to be a successful trader, stuff like that. I'll be releasing courses and content for everybody. There is a lot that goes into being a successful trader. The algorithm will help you get there. The algorithm is a good software that will teach you proper trade management and how to control your risk, your emotions, your psychology, stuff like that. In addition to this software, I typically provide you with let's clean things up here for a second. I provide you with a currency strength meter, and that can also help you. Currency strength meter for me is in my bottom left corner. Typically, it's emailed to you upon purchase of the algorithm. What it can do is help you make not silly decisions. So we're on pair, odd, CAD. CAD is stronger than the odd. So the sell makes sense, right? Say it was the same setup and odd is through the roof. It's where GBP is. It's the strongest currency. And CAD is where NZD is. It's the weakest currency. You can use currency odds to help guide your trades. Even though the setup might look good, the currency strength might just not be there to support the trade. So you wouldn't want to sell this if odd is the strongest currency, because your odds are it's probably going to pop up further and maybe test this green line, for example. Just because the line is green or the line is red doesn't necessarily make it a buy or a sell. That's what we go by because it's highs and lows. But anything can happen. So you can find a red line that's a buy and a green line that's a sell. So just keep an eye out for that. I like to use my currency strengths to guide me. If you don't know much about currency strengths, every currency has a different strength. This is a meter. The problem with meters are that they are lagging. What does that mean? It's not 100% accurate. It's a good basic guide. It's a good basic guide to the markets to say, hey, GBP is a powerhouse right now and NZD is weak as heck. So, maybe I'll take a look at that pair. So if you go to GBP NZD, you'll see, it's right. GBP has just massively made a big move up. So you wouldn't be looking to sell this pair, for example, because NZD is in the very bottom pair. NZD is not strong. If you're selling a pair, you have to be selling a strong pair. So, for example, Euro NZD. Or let's try. Sounds kind of tough here because odd GBP odd. Maybe. Let's see. Same story though here. GBP is the strong currency. You wouldn't want to sell GBP because odd is too weak. You get the idea. Another thing that might trip you up, you'll see Euro and JPY are very similar in strength. If you look at the chart, more often than not, it's going sideways. And yep, there you go. There's your sideways movement. Typically what that means is you don't want to trade this. You don't want to trade something like that. It's just consolidation. Two currencies are battling it out. They're fighting between highs and lows, all these wicks and such, and these bottoms and these supports. You don't want to take a guess there. This is why we use the algorithm. Maybe when you were pre-algorithm, you would take a guess there and think, I'll see what happens. I think it's a sell or it's a buy. So just be careful of that. But you're going to scan through your pairs. You're going to find real quick there's just some setups that are just not as clean or moving very nice. That's just the markets. They can disrespect the algorithm left and right, but more often than not, they do respect the algorithm and do give you a chance to make money. If you hover your mouse over most of the lines, you'll see they're monthly, weekly, weekly, monthly, yearly, weekly, yearly, monthly. You want to go with the higher level lines, right? So a yearly level is going to be stronger than weekly or daily or monthly. You just want to be on the lookout for that because these are just more factors that will put you ahead of the pack, put things more in your favor. Here's a good buy setup, Euro USD. We have a buy line show. You had plenty of time to get in. We're talking, if we're on the hourly chart, we had a 1, 2, 3, about a 4-hour zone that you could have gotten in. And if you do follow, I don't particularly follow technical analysis, but I do follow market structure and price. You would see these 2 points start the line up, which could be head and shoulders, which could be just a valley in the market looking to go back, back to another peak. Who knows? We don't. That's why we're using the algorithm to guide us. It's just more tricks for the toolbox. But anyway, you'd be on the 15-minute chart. You would see a buy potential. This is not the cleanest buy. More than likely, this is like a news event here for Euro USD. But if you, say, used a small or relatively small stop loss, you made your entry at the line because you saw this consolidation, take a buy. If you're at 20 pips, you still survived. And this is 16, 17 pips of drawdown for a gain of what is essentially 25 to 30 pips with a buy. So it would fit our criteria, which is taking a buy at a low, right? A buy is at the low. This was the low. It does hold consolidation, although kind of ugly-ish. Maybe if you got in and you saw this, that would be considered consolidation, but this is just, once again, this is not normal market movement. This is actually just a news event. One thing you do want to do is avoid news events for the most part. So typically each night I will just go through my economic calendar. There's a million of them. Use Google. I like to use forexfactory.com. They're an excellent source. But yeah, avoid news. It'll knock you out of trades more often than not. But with the algorithm, you can kind of almost predict news events as well, which is extremely powerful, very nice to have, to use. So yeah, basically every day you'll just be scanning through your pairs, waiting for your pop-ups, price to come near a line. If you're taking sells, like you wouldn't want to take this as a sell. Why? Price is way too low. Price is low compared to where it was. Price has been hanging around over here. So maybe, just maybe, what we'll do is we'll wait. We'll wait for price we'll drop down to 15-minute. Wait for price to do something like this. Price kind of consolidates. I bet it's going to come up above the line, test it, play around, test it one more time, and we'll take our buy and it'll go up. You can use these lines for buys. You can use them for sells. The color doesn't necessarily mean it's a buy or a sell, but it's a good guidance. It's a good way to guide yourself if you don't know. Oh, green is buy, red is sell. Well, here's an example of a pop-up. EuroCAD hit the high support resistance at the price 1.46404, which is true. So you have a year and a monthly from 5 years ago lining up, which is very important. If you go to the hourly, you'll see it's kind of in a tough spot. It's at a high, but is it really at a high? You do have room to move down here. This is a tough one. You could go by some candle patterns, market structure, and say, yeah, this kind of looks like a sell, double top type of deal. This would be a valid potential entry. To check that, what you're going to do is you're going to drop down to the 15-minute chart, check for some consolidation. Looks like it's happening here. I'm going to drop to the 5, take a better, closer look here. And what you do see is price does come up, test it. It is failing. It does fail a line. It tests it again. So a sell would be perfect here. You take a sell right here. And then your stop loss would be, 10, 15, 20 pips, whatever you might make it. Keep in mind the spread. The spread is the difference between the bid and the ask. The bid is the black line, ask is the red. For my broker, since I'm using really high leverage to flip small accounts into massive amounts, it is typically a little bit higher. I don't pay commission, I just pay spread. So for example, my spread's pretty much 3.5 pips. So for example, I make my entry here. My stop loss would be above this, right? So we're at 10 pips, 15. So let's say it's 15 pips. I'd add my spread to it. So it would be more like 18 to 20 pips would be my stop loss, 18 to 20. And that's really all you have to do. It's not rocket science, nothing hard or challenging about it. Really simple. Here's a good sell example. Sometimes price will just spike the line, just touch it once, and then just start dropping immediately. What you can do is just keep an eye on those things like that. Make sure you are following the pop-up. This happened quite a while ago, probably maybe an hour and a half ago. It just touched the line, respected it immediately, and just dropped back down, 15, 16, 20 pips. You don't want to put yourself in something like that. You really want to be within 5 to 10 pips of the line when you're taking a trade. You don't want to, take a sell now because it's just too far away from the line. There's no sense. You're better off just waiting. A lot of it has to just do with patience. CAD JPY, this is kind of at a high. I'm not sure if I would take a buy. It's kind of more like I would wait for a sell here, because this is kind of like a high. This is kind of like a high. It does have room to move up per se, but considering, is it likely to go like that, or is it likely to just kind of just break below, test it, and then, maybe drop down to this level? So in this case, I would just keep an eye on it, wait to see what it does. If it does make a move up, then hey. But if it does drop below that algorithm line that we have here, it's a monthly and a weekly, it would be a very valid sell because the sell is at a high, and that's where you want to take them. Once again, you want to kind of discriminate because there are going to be points in the market that price is not even near. For example, you have 3 linear points here, and you just want to discriminate based on market structure and where it is. Just keeping the simple thought process of I'm selling at highs and buying at lows. It's a proven thing that works, and we're just amplifying that with the algorithm. So you'll end up, being patient, waiting for the correct trade, waiting for your consolidation patterns, taken that sell, taken that buy, and it will pay off tenfold. You'd rather a couple winning trades versus, say, 2 winning trades and 4 losing trades that put you at break even. But if you've enjoyed this video, if you have questions, you can always reach out to me. You know how to get a hold of me. Tell your friends about the algorithm. There is a nice affiliate reward. I appreciate it. I like to get a lot of people on board. Imagine a massive hive mind of, say, hundreds of traders all trading the algorithm. You would find setups 24/7. Most of the work would be done for you by other traders or myself. And I think that would just make an amazing community, because we could easily be the 5% of traders and then increase that number to even higher than that of people who are successful trading Forex. This is what defines success, and what defines the 95% that lose. The 95% don't have trade plans. They don't have risk management. They don't have a system that works. They're following, someone else's nonsense, divergence. No, it doesn't work. We're harnessing the power of computers. We're using AI to help us, to guide us, to make decisions that we might not see ourselves. We're just using market structure. We're using candle patterns. We're using price. If you follow quarters theory, I go over that in my educational training series as well, to develop you into a better, stronger, more aware trader that starts to realize the indicators are not the way to go. It's more advanced now. It's a lot more sophisticated. There's other algorithms in the software markets by major companies that they pour, millions upon hundreds of millions to billions of dollars into, to make microtransactions all day and just scalp profits from the market much faster than you or I could do. But this is our way of staying competitive with the markets, beating the markets, giving them a run for their money, and also allows you to make simple guided trades with a set of rules that will help you, manage your stops and your losses, and also amplify your gains and your wins by discriminating and just finding the specific setups that we're looking for. We're keeping it real simple. We're using one system. We have 2 setups. I like sells. You might like sells. You might like buys. Play around with it. Starting out, use a demo account. Use demo until you get it. It might take you a week or 2, but keep in mind here, you're learning a skill that's going to make you consistent money for a lifetime. You go to work 40 hours a week. Most people go more than 40 hours a week. And, whether they're learning a skill or they're just doing something useless, they're dedicating their time to it. So if you can just dedicate, say, an hour or 2 of your time per day, per every other day, per trading week, this will be, a skill under your belt, and the main skill you'll be moving forwards with in no time. If you're not a well-rounded trader, I highly recommend my future trading courses, where I go over, what it takes to be a, beginner trader, what it takes to be an advanced trader, and what separates, those who are successful and those who are just taking guesses and just, free balling into the market and tossing this, tossing that, and don't even know what a stop loss particularly is, or how to manage trades, or some of the more in-depth topics like market structure and price movement. So yeah, if you guys enjoyed this video, let me know. Reach out to me.